Hello everyone and welcome back to my YouTube channel. Before you continue watching this video, please subscribe to my channel. I'm targeting 1,000 subscribers within a month. Yeah, so it will be so prudent for you to subscribe on this channel. So today I'll do a question on cash flow and I'll read the question. Bermuda Limited presented the following financial statements for the years ended 30th June 2021 and 30th June 2022. Statement of profit or loss for the year ended 30th June 2022 is provided here. Then we also have statement of financial position as of 30th June. Yeah, it's also provided there. And they are divided into two. We have for 2022 and for 2021. Then additional information. Number one, property, plant and equipment held by Bermuda Limited are items of plant and equipment and free on premises. During the year ended 30th June 2022, items of plant and equipment which originally cost shillings 40 million were disposed of, resulting in a loss of shillings 6 million charged in administrative expenses. These items had a net book value of shillings 28 million as at the date of disposal. Number two, depreciation charge for the year ended 30th June 2022 was shillings 43 million. Number three, shillings 50 million of convertible loan stock was converted to shillings 50 million ordinary share capital at par during the year ended 30th June 2022. Required, prepare the statement of cash flows for Bermuda Limited for the year ended 30th June 2022 as per the IAS 7 statement of cash flows. So this is how you are supposed to tackle this question. So just say Bermuda Limited. We have statement of cash flows. Start statement of cash flows for the year ended 30th June 2022. So I just create the bottom border. So I'll highlight it, and then I'll just center. I'll bold this, then I merge and center. Then I'll also bold this, then I merge, center, and again bold this. Then I just merge it and center. Yeah. So the shillings were in millions, so I'll just copy shillings into millions. So I'll start with operating activities. I'll use the indirect method of cash flow. So I'll start with operating activities. Yeah, I'll bold it. Yeah. So here we always start with the profit before tax. So just route, or just say equals, and I just come here and copy because of the interest of time. So I just copy that, and the profit before tax will be this. Yeah. So I'll just select that value. Then I'll go to adjust. So I'll adjust for hold this. Yeah, so an adjustment, we'll start with the depreciation. So we'll look at the depreciation for the year. Start with depreciation. Then depreciation and additional information number 2, we are told depreciation charge for the year ended 30th June 2022 was shillings 43 million. So I just write here 43. Yeah, then I'll look at the two cousins of depreciation. That's impairment and amortization. So I'll start with the amortization first, and I'll check this on the statement of financial position. So I'll come here, statement of financial position under non-current assets. And the first one, we have property, plant, and equipment, yeah, which we already adjust the depreciation for the PPE. Then intangible assets, now I'll come to intangible assets. And when you check at the intangible assets, you'll realize that in 2021, the value of intangible assets was 50 million. But when it comes to 2022, the value reduced to 40 million. So that means that there was amortization. There was amortization. Yeah, there was amortization. So there was amortization of 10 million because the value came from 2021 and dropped to from 50 million and dropped to 40 million in 2022. So I'll just say here amortization. Yeah, so amortization, I'll calculate the value. Yeah, I'll calculate the value. So I'll pick this 50 million minus 40 million. Yeah, and the amortization will be 10. So the next thing I'll check is the impairment. And impairment, I'll still go to non-current assets. The non-current assets under statement of financial position. So I'll check whether there was a goodwill. Yeah, but this question did not have goodwill. So I'll not include impairment. So I'll go to the next item. The next item that always follow this is the loss on sale of PPE or gain on sale of PPE. So if you have a loss on sale of PPE, then we'll add it back. And if there's a gain in sale of PPE, then we'll have to subtract it from the profit before tax. So I'll go to the additional information. Number one, you say, during the year ended 30th June 2022, items of plant and equipment which originally cost shillings 40 million were disposed of, resulting in a loss of shillings 6 million charged in administrative expense. So they have confirmed that there was a loss on sale of PPE. Yeah, they have confirmed through that additional information. So the loss was 6 million. So just write 6 million. Yeah, so because it was a loss, we add it back. If it was a gain on sale of PPE, then we subtract it from the profit before tax. Yeah, so I'll go to the next item. So the next item will have been the gain, but there was no gain. Yeah, so I'll go now to the statement of profit or loss to do my adjustment. And this is what you do. Yeah, you just have to know that you have to start with depreciation, amortization, and impairment. Then you check at loss or gain on sale of PPE. If it is a loss, then you add it back. If it was a gain, then you subtract it from the profit before tax. So we could have deducted here if it was a loss. So from there, you just go now to the statement of profit or loss which you are provided with. And you start at profit before tax as you move up. So you'll adjust everything here except the administration, distribution, and the gross profit. Yeah. So you will adjust everything except administration expenses, distribution costs, and gross profit. So I'll start. And the secret is in everything that is not part of distribution, administration, and the gross profit, if it was added, you subtract it. If it was subtracted, then you add it back. So you just come here and stand at profit before tax. So you come here. So start checking going up. So the first one is finance cost, which is not part of administrative and distribution cost, and also is not part of gross profit. So I'll start with the finance cost. So I just come here and say equals to finance cost. I'll just copy it. Then I just say equals and I pick the value. Here, the finance cost, you can see it was 17. They had for administrative 48, 17, 17. Then the total was 141. So it means that this finance cost was subtracted. The 17 was subtracted from gross profit. So I said if it is subtracted, then you add it back positively. Where you change the value now to positive. So you'll add it back. So I just say equals to, and I pick the 17. Yeah. So I'll add it back as a positive. Yeah. Because here it was deducted. It was deducted. Yeah, it was deducted. And you can see it was deducted. 48 plus 76 plus 17 is what gives us 141. So this 141 was deducted. So it means that the finance cost also was deducted. So when it is deducted, then you add it back positively when you are doing adjustment. So I'll go to the next item. And after that, now we have distribution. No, we don't adjust that. Administrative, we don't adjust that. Then I'll come to investment income. So I'll write investment income. Just copy it. Investment income. Yeah. And investment income, you can see that the investment income was added to the gross profit. Yeah, it was added. It's positive here. So we will have to subtract it. So just put equals, then a negative sign, then you just select. Yeah, it will give you that figure. So you go and check another item, which is not part of the administrative and the distribution or gross profit. So after that, there's an item of gain on financial assets at fair value. So it was also added. I'll subtract it. So I'll first select it. Then I'll put a equal sign, then I'll say equals. And because it was added, it's positive, I'll have to subtract it. Yeah, and those are the only adjustments under operating activities. So key things, you have to know that when you are adjusting, first you check for depreciation, amortization, and impairment. Then you check whether there was loss on sale of PPE or gain on sale of PPE. Loss on PPE, we said that if it is a loss, then you add it back. If it is a gain, then you subtract it. Yeah, then from there, you just go to the profit before tax, then you move upwards. Then you check items which does not include administration, distribution, and the gross profit. Any other item there, you check whether was it subtracted from the gross profit or it was added. So if it was added, you subtract it. If it was subtracted, then you add it back. Yeah, then once you have done with that, you are through with the adjustment. So you write here cash flow. Sorry, cash flow from operating activities before working capital. So I'll just say W, yeah, before working capital. So I'll just come here and sum them, say equals to sum. Yeah, so I'll have 179. So I'll go to working capital. So I'll just write here working capital. So I'll do also the adjustment under working capital. So I just bold it. Yeah, so working capital, we agree that there are three. We have the inventory, the trade receivable, and trade payable. So I'll start with the inventory. Now, so I'll come here under current assets and I'll start with the inventory. So I'll check at the trend on the inventory. So when there's an increase in inventory, then that's a cash outflow. So that means that we are spending money to purchase more inventory. Yeah, if there's a reduction, then it means that we have been selling. Yeah, we have been selling. So there's a reduction. So we have been receiving cash because we have been selling inventory. The same applies to trade receivable. When there's an increase in trade receivable, then it means that we have been selling in credit, and people have not been paying us. But when there's a reduction of the trade receivables, then it means we have been receiving cash out of payment made by our customers. The opposite is true, or when it comes to trade payable, when there's an increase in trade payables, then it means that you have been receiving goods in credit and you are not paying. So it means that you are holding cash. But if there's a reduction in trade payable, then it means that you have been making payment. Yeah, you have been making payment to your trade payable. So that's a cash outflow. So we'll see what happens with the inventory in this question. So I just say equals to, then I'll check. You go to inventory. You realize that this is 2021. For 2021, the inventory was 176. But for 2022, it reduced to 123. So it means that there was a reduction in inventory. So it means that you are selling, and that's a cash inflow. So to get the value, I'll just pick this. 176, then I subtract 123 because the value reduced. The inventory value, so it means that we have been selling. I just enter. That's a positive, that's a cash inflow. So it will be positive. So I go to the next item, which is trade receivable. Go to trade receivables. So I'll select it and I'll do the same. I'll compare. Yeah, I'll compare for 2021 and 2022. Yeah, so you see in 2021, it was 87, but for 2022, it was 95. So it means that the trade receivables increased. So when trade receivable increase, then it means that that's a cash outflow. It means that we continue selling without receiving, without receiving money. We continue selling on credit without receiving money. So our debtors are not paying. So that's a cash outflow. So it's a negative cash flow. So this is what I'll do. Just come there and say, because I want the value to be negative, and take 87 and I subtract the 95. Yeah, because there was an increase. So it means that there's no cash inflow, it's a cash outflow. Yeah, so I'll go to the last one under working capital, which is trade payable. Just come there and copy it. Then we see how it behaves. For 2021, it was 100, but for 2022, it was 156. So it means that the trade payable has increased. So it means that we are holding money. We are not paying we are not paying our creditors. So the increase in trade payable is a cash inflow. So it will be positive. So I'll pick 156 and subtract 100. And I'll have 56. So with this, I just say here, cash flow from operating activities before tax. Before tax. So I'll extend this. Just come here and say equals to sum. Yeah, I'll sum this all the way. And I'll have 280. So the next thing will be tax paid. Yeah, I'll calculate the amount of tax which is supposed to be paid. So with this, I'll have to open a tax account. So I just write tax account. And that's how you tackle this question. So I'll start with the balance brought down, which is for the previous year, which is 2021. So I'll go to the statement of financial position and check whether there was income tax payable. Yeah, so it's here, income tax payable. And you can see in 2021, it was 34. Yeah, it was 34. So 34 is the balance brought down. So I'll pick 34 as the balance brought down. Then I'll check for the income tax for the year. Yeah, how much was charged for the year. So I'll just come here and say equals to, and I go to statement of profit or loss. So what was the income tax? So the income tax expense here was 47. I want it to be positive, so I just say negative, then I pick this. I'll get 47. So I'll sum these two. Yeah, so it will give me 81. So I'll compare with the carried down, the income tax payable carried down. So I just come to the statement of, you go to the statement of the financial position and you check the income tax payable. And you can see the balance carried down is 19. So just select 19. So you can see there was a movement from 81 to 19. So the difference is the tax which was paid. So I just here say tax paid. Yeah, so the difference from 81 all the way to 19 is the tax paid. So the tax paid is an expense. So I'll want to get it in negative. So I'll just say equals to 19 minus 81. And I'll have 62 as the tax paid. So I just come here and say equals to, then I pick it the way it is. Yeah. So I'll now say cash flow from operating activities. So cash flow from operating activities. So just come here and say equals to, and I sum these two. Sorry, let me undo that. Just equals to sum. Pick that. Yeah, and I'll have 218. And this 218 is the cash flow from operating activities. And I'll just name it as A. The name is at A. Yeah, so the next thing, I'll go now to investing activities. Go to investing activities. Yeah, so I'll just bold it again. I'll bold it. Yeah, so when you are tackling investing activities, you'll go to the non-current assets. Yeah, you'll come here. The non-current assets under statement of financial position. This is what you do. You'll check this, all these items under non-current. And what you are supposed to do here is to check whether there was cash received in acquisition or cash paid in to acquire any property. So I'll start with PPE. So I'll start with cash paid to acquire. Start with cash received on disposal. Was there any cash received on disposal? So I'll say cash received on disposal of PPE, the property, plant, and equipment. So I'll check the additional information. There's somewhere where they said that during the year ended 30th June, items of plant and equipment which originally cost 40 million were disposed of, resulting in a loss of shillings 6 million, charging administrative expenses. These items had a net book value of 28 million as at the date of disposal. So if it was sold at a loss of 6 million, but the net book value was 28, then it means that the cash received on disposal of this PPE was 28 million minus the loss, which was 6 million. Yeah. So that's the cash which was received on disposal of that item of PPE. So the next item, I'll go to cash paid to acquired PPE. Yeah. They follow each other. You start with cash received, then there's cash paid to acquire. If there was acquisition, cash paid to acquire PPE. Yeah, so this one, we must open an account, a PPE account to calculate it. So I just say PPE account. Yeah, you have to be very keen here. So for PPE account, we'll also start with the balance brought down, which is for the year 2020-21. We just go back to the statement of financial position and I'll pick this. Yeah. Then you check whether was there any revaluation. So I'll go to the revaluation reserve and check whether there was a revaluation at the end of the year. So when I check, I can see it's 67 million in 2021, but it reduces to 36 million in 2022. So that means that there was no fair value uplift. There was no upward revaluation. So what this means, when you realize that there's a reduction in revaluation reserve, so it means that the difference, the reduction, is being taken to the retained profits account. So this, the difference between these two will be taken to retained profit account. So if there was an increase, then we could have put that revaluation. We calculated the revaluation, but you see there's a reduction. So this reduction, the difference is taken to retained profit. So there was no revaluation. So another item that we'll check is whether there was depreciation. And yes, it is true, there was depreciation within this year. So I just write depreciation. And depreciation will reduce the original cost of the property. So I'll just check depreciation. It was 43. Yeah, it was 43. So I just say equals to, then I put a negative sign, then I select that depreciation. Then the other item we'll check is the disposal. Was there disposal? Yeah, so I'll write here disposal, which will also reduce the value of the PPE. So I just say equals to. Then I'll go to additional information. They're saying during the year ended 30th June 2022, items of plant and equipment which originally cost shillings 40 million were disposed of, resulting in a loss of shillings 6 million charged in administrative expenses. These items had a net book value of shillings 28 million as at the date of disposal. You leave it there. So disposal is done at net book value. So you don't use the 40 million, the original value. You dispose at net book value. So it means that we disposed items worth 28 million. So just come and write 28. So you check whether there was any property which was acquired through lease. So you'll go to non-current liabilities, current liabilities. No, there's no lease at all. Yeah, so you check any adjustment. So there was no any adjustment. So you just come and say, you sum this here. And you'll have 193. So you'll say the balance carried down, which, how much do we have now under balance carried down? So just come to 2022 and you pick this. Yeah, so I'll pick that. Yeah, so I'll compare. We were supposed to have PPE equivalent to 193, but we now have 327. So it means that something was acquired. So the property which was acquired. So just say here, the balancing figure is the acquired PPE. Yeah, so you'll look for the difference. And because I want it to be negative, because it's cash paid to acquire PPE. So I just pick this 193 and I subtract 327 to get the negative sign. So the cash paid to acquired PPE, we have confirmed it was 130.34. Yeah, so I'll go back to the non-current assets again and check. So I'm done with PPE. So I'll go to intangible assets. Already this was catered for under amortization. So I'll go to the next item here, which is financial assets through other comprehensive income. So I'll go to this through other comprehensive income. So I'll check. You can see the movement of the financial assets. So this is what I'll do. I'll also say cash paid to acquire financial assets under comprehensive income. So I just say cash paid to acquire financial assets. I'll just say FA. Yeah, then this is what I'll do. I'll create an account for financial assets account. Just write financial. Yeah, so I'll create such account and let's start with the balance brought down. Yeah, the same way we did for PPE. Yeah, so I'll go to the statement of financial position and I'll pick this because this is for 2021. So I'll pick 10. Then I'll check whether there was any adjustment. So there's here where we calculate the fair value. There's fair value gain of financial assets somewhere here. So there's gain on financial assets at fair value, which is 5. So I'll include it. So I just write gain. Yeah, and you know gain increase the value. So I'll just say gain, which was 5. Then I'll check another adjustment. When you come to the statement of financial position, you will see this financial assets through other comprehensive income, which is an equity reserve. So it moved from 0 to 2 million. So it means that this was a revaluation on the side of financial assets. So I'll just say revaluation. Which is, in this case, it is 2. Yeah, so at the end of the year, the value of the financial assets was supposed to be the sum of this. Yeah, so it was supposed to be 17. But now we want to compare with the the carried down amount. What is the current value as per the statement of financial position? So we just come and check the financial assets there. Sorry, here. Financial assets through other comprehensive income. So it's 22. So it means it has moved from 17 to 22. So it means that we have acquired some. And for acquisition, we use money. There's cash which is paid to acquire this financial assets. So I just write here acquisition. Yeah, and because money is paid, I'll look for a negative figure. So I'll take 17 and subtract 20, 22, and I'll have 5. So 5 is what was paid to acquire financial assets. So I just pick 5. So I'll check again if there's any item remaining under non-current assets. Remember, it's only under non-current assets. So there's no any item remaining. But we had investment income. Investment income will form part of the investing activity. So I just come here and say, and copy it. I just copy it, the investment income. Yeah, when it is in a question, then you have to include it there. And here now, it will be positive. So I just say equals to the negative, then I choose the value, change it to positive. So that's the investment income. And I think up to that point, I'm done with cash flow from investing activity. So I just write cash flow from investing activities. Yeah, and this is what I'll do. I'll just sum this. Enter, and I'll name this B. I'll name this B in capital. And this is what I'll do. Let me just bold this. Yeah, so that you can see it clear. And I'll also bold this cash flow for and bold that. See home, then we bold. Sorry. Yeah, I'll bold it that way. So that will make my work easier. So I'll go to the financing activities. Yeah, which is the last part. So I'll just write financing. And I'll bold it. I'll bold it. Yeah, so financing activities, we always go to equity and liabilities. You check from equity and liability. So I'll start with this. And you look at the trend, the trend. So I'll start with ordinary share capital. You can see at the beginning, we start with 150, then it ends at 230. So it means that there were cash which was received on the issue of new ordinary shares because the shares has increased. And you can also see the share premium also has increased by 30. So this is what you do. There was a statement here that number 3, addition of information. We say shillings 50 million of convertible loan stock was converted to shillings 50 million ordinary share capital at par during the year ended 30th June 2022. So I'll create the ordinary share account. So I just write ordinary shares account. Yeah. So this will help me to identify if there was any shares issued. So I'll start with the balance brought down, which we say is for the year 2021. So I'll just go back and pick this. So it was 150. Then we are told 50 million of loan stock, shillings 50 million of convertible loan stock was converted to ordinary shares. So I'll just write here loan stock. So it was 50. Yeah. Yeah, so there was no any adjustment. So I just say equals to, I'll just sum this 200. Then I compare with the balance carried down. What do we have at the end of the year? So I just go back and check the ordinary share. It was 230. So I just pick it. Yeah, so you realize that we had 200 when we added the loan stock, but we are up to 30. So it means that we issue ordinary shares. So that's, we calculate another cash which was received. Yeah, cash received on issue of new shares. So the cash received will be positive. Yeah, because we are supposed to have 200, but we have 230. So it means that we issue some shares to the public. So I'll take this and subtract 200. So I'll have 30. So I just come here and say ordinary shares. And then I say, yeah, 30. Yeah, then the next one is the share premium and the equity. Let me remove this word. Yeah, so share premium, we'll check. Yeah, so there was a premium. So from 0 to 30. So that the difference is just 30. Yeah, so we just put 30 there. Then I'll go to the next item after share premium. It's revaluation reserve. Revaluation reserve, it reduces. And I say the reduction will be taken to the retained profit. Then we have financial assets through other comprehensive income. We have already used the revalued amount to calculate the financial assets at fair value. Then we have retained profits. Yeah, so this is where retained profit will use this to calculate the dividend paid. Yeah, we'll use the retained profit to calculate the dividend paid. Yeah, so I'll open a dividend account. Come here and say dividend. No, let me just say retained profit account. Retained profit account. So I'll look for the balance brought down under retained profit. The balance brought down, I'll go to the statement of financial position and check. It was 91. Then was there any additional? Yeah, we check for the profit for the year. Yeah, profit for the year will increase the retained profit. So I just say equals, then I go to the statement of profit or loss, then profit after tax for the year is this. So I'll pick it and enter. Then when we check the revaluation reserve, it reduced. And when it reduced, then it means that the amount which 67 is reducing to 36 is taken to the retained profit account. Yeah, it's taken to retained profit account. So let's say from reserves, yeah, so this amount will also be taken to, yeah, because it was reducing. So I'll check the difference in reduction. So 67 minus 36. Yeah, so the 31 reserve was taken to retained profit. Yeah, so I'll sum this. These are the only adjustments. So I'll sum this. Yeah, then I'll compare. I'll compare with the balance carried down. With the balance carried down. So what was the balance carried down? I'll come to retained profit. Then I pick this for 2020. So you can see it was at 189, but it has moved to 121. So it means that dividend was paid. Yeah, the sum dividend which was paid. So I just come here and say dividend. Then I want it to be negative. So I'll just pick this and subtract 180. So the dividend which was paid was 68. So I just say equals, then I say pick the 68. Yeah, so up to there, I'm done with retained profits. I'm done with retained profits. So I'll come to non-current assets and non-current liabilities, sorry. So 10% convertible loan stock, we can see it was from 150 to 100, but we were told that 50 of it was 50 million was taken and converted to ordinary shares. So if you subtract 150, you less 50, you get 100. So there's no adjustment on this. So there was nothing like loan paid, yeah, or loan acquired. So we ignore it because the 50 million, you subtract 50, it will be 100. So there was no adjustment. So I'll come to bank overdraft. Bank overdraft is part of cash and cash equivalents. Then now our trade payables, we have already used it. Then I'll go to interest payable. Yeah, so I'll write here interest paid. interest. Yeah, and this also allow to create an interest account. So I just come here and say interest account. So I'll pick the balance brought down. Yeah, interest payable for the year 2020, 21. So I'll pick this. And then there was finance cost, which was paid for the year. So I just say interest for the year. That's the finance cost. Just come here and say equals to. Then I'll go back and check the finance cost. It was how much? Finance cost, it was 17. So I'll pick the 17. Yeah, then I'll sum this two. And sum this two. And that will be 20. So I'll compare it with the balance carried down to see whether the value reduced so that I know the interest paid for the year. So carry down, I'll go to interest payable. This one, so it's 7. Yeah, so it reduced from 20 to 7. So it means that the interest paid was 13. So I just pick 7 and I minus 20. I'll get 13. So I just come here and say equals to, and I pick 13. Yeah, so I'll go look at the other adjustment. So we have interest payable. The income tax payable, we have included it. So there's no any other items which is remaining. When you go to the current assets, the financial assets as fair value, this form part of the cash and cash equivalents. Yeah, so we are not supposed to use it. So we have exhausted all the items under financing because we have the ordinary shares, dividend paid, and interest paid. So I just sum this. Yeah, so we'll have negative 21 and we'll pick this as C. So I'll say this is now C. Yeah, and this is now the what we call the cash flow from financing activities. Cash flow from financing activities. Yeah, so I'll include this to be C. So I'll just bold this so that you can see it clearly. I'll bold it. So when you are done with all this, then you come to the net, you just say net cash flow. So the net cash flow will be A plus B plus C. So I'll just pick this and I add to this. Then I add to this. Yeah, then I'll now have to add this to cash and cash equivalents brought down. So cash and cash equivalents brought down. So the brought down is for the 2021. So this is what I'll do. I'll come here. Financial assets at fair value are part of cash and cash equivalents. So I'll add this to this. Then bank overdraft is also part of that. So I'll subtract the bank overdraft because it's negative. It's a negative figure. So I'll enter. So when I enter, I'll have 8. Yes, cash and cash equivalent brought down. So this net cash flow plus cash and cash equivalent brought down should be equal to cash and cash equivalent carried down. Yeah, it should balance. Yeah. So cash and cash equivalents carried down. Yeah, it should be net cash flow plus cash and cash equivalent brought down should be equal to cash and cash equivalent carried down. So when you add 86 plus 8 should give you the same as cash and cash equivalent, brought, carried down. So I'll do it. So I'll check out the cash and cash equivalent, brought, carried down, sorry, carried down. So I'll go to my statements and I'll start with the financial asset, this one. Then I'll add to 29, which is cash and cash equivalents. Then I'll add it to bank overdraft. Bank overdraft is 0, so there's no need of adding. So I just say, okay. So I'll get 94. So is it true that when you add 86 plus 8, is it 94? Let me see. Yeah, just equals to sum. Then I drag. Yeah, so it will give me 94. So it balances. So it means that we are right. Yeah, so that's how you are supposed to do this question. This is how you are supposed to do this question. This is how you are supposed to tackle this question under Bermuda Limited. And let me just create the bottom border. The bottom, let me say bottom double border. Yeah, so I'll also create the top border. Yeah, that's all. So that's how you are supposed to tackle this question. Until next time, see you.